All right, folks, Anthony Special here with Hawkeye Traders. Super excited to dive into this video with you because we utilize the Hawkeye WideBar and the ultra high volume radar dot to our advantage live, right? In the market. I identified these, I analyzed these, I provided interpretation and expectation based on these volume analysis approaches to both the WideBar and the ultra high volume radar dot. All right, and guys, just so you know, I took one of these trades personally. Okay, B, other live traders who were trading live money accounts were also present when I made these calls. So there is some credibility. This is not hindsight. All right. So let's talk about them. We're going to break them down and kind of go one by one. So what you're looking at here is a 3-minute chart of WTI light sweet crude oil. Okay, so 3 minutes means each candle represents 3 minutes of market time, or a 3-minute rotation, which it can be commonly called. We are using a candle chart, and as you can see, printing on the chart is the Hawkeye volume paint bar, the Hawkeye volume wide bar, which is this magenta color. All right, and the Hawkeye volume and radar dot down here on the bottom, and these little orange dots throughout are Hawkeye pivots. So, got together early this morning with some folks, taking a look at this market. Again, trading this particular setup myself. And here's kind of how it all concluded, right? Like, we ran up into this direction here. From that last low plotted, we created an area here where we were having a little bit of a hard time penetrating. Okay, so you can see we were creating a price formation that looks something like that. All right, so we're banging on here with buying volume and having a hard time penetrating 76.12 roughly. The wicks poke through here to 76.13, so right in that area. So I'm seeing this transpire thinking, well, we may go lower, but I need confirmation. Right? We may be in for a reversal here. I have buying volume present. It's not picking up. I can't seem to get above this little level here. I need some kind of confirmation. And as this wide bar here at 8:06 a.m. Eastern Standard Time, so that's New York time, printed right there, that was all the confirmation I needed. Okay? Because I knew I could take a low risk trade, and if it worked, great. If it didn't work, that's okay, because I know that I'm going to take a low risk trade, right? So I'm going to get short at the close of this candle, right? The close of this candle is at 09. The high of this candle is at 13. So I'm just going to throw, listen, if I'm right, we're not going to penetrate this wide bar. If I'm wrong, we're going to push through it and probably keep going higher. And then all I did was set expectations here to the downside by using some prior price action. And I'll share with you what those expectations were. So from 76.09, I was looking for 75.90, 80, 70, 60, and ultimately 45. And you could see we ran out of steam at 45. So I was able to very successfully pay myself and protect myself by just identifying what the price action was doing. All right. Now, we also had this little pushback here just to give you kind of perspective. This was a 12.8 to 1 risk reward. All right. So 64 ticks at 75.45, which was our last predicted area of possible kind of supports we found, which it was. So really kind of a great, very little risk, very high probability reward. Again, it was the recommendation was to start considering taking profit there at 75.90, which gave us just short of a 4 to 1 risk reward, which is pretty good, right? You want at least a 3 to 1. If you're really confident in your trade plan, you could trade 2 to 1, but the fact of the matter is the bigger that ratio is, the bigger that R number is, the better you're going to be off. So that's how we played it, kind of to the downside here. Now I want to show you something interesting that transpired, because we got this really aggressive push back up here, and I want to show you just kind of how we looked at this, and it was really just coming in here and just looking at this area that we pulled right back into. So I was looking at the low here of the wide bar, and then this last big wick here before we got very strong selling volume. All right, so you can see that we retested this very shallow, before we went lower. We retested this area again and then continued. So from a price perspective, this was a really clear, defined pullback area. Identified this live too, so this was, again, not in hindsight. This was all done while the market was ticking. Got strong selling coming in here, get a really aggressive reversal, and then we get some continued follow through. So that was the play to the downside, but now I want you to pay very close attention to this very specific candle here. Okay, and why do I want you to pay very specific attention there? That is the highest volume, all right, printed so far in the session. This is 9 a.m. This is the open, technically, for the crude market on the East Coast. You could see super strong selling, and we probably close, like, I would call that the 65 percentile area of the overall move of this candle. And I want you to notice something, and this is something else I also identified live in real time. I want you to notice the wick of this candle. What did the wick of that candle, ultra high selling volume, become with an ultra high radar dot, highest volume printed so far in the Globek session? What did that become? It became support, right? So what does that tell me? That there was what? A volume climax here. The sellers gave it all they had, couldn't go lower. And I said out loud, if we can't push through that wick at 75.45, which was a profit-taking target, right, previously identified before this volume already printed, we're going to reverse from here. All right, reverse to where? Well, probably back to this area we had previously tested, and then probably back to the highs. So the failure to try to go higher here on this wide bar is what triggered this short, right? And the failure to go lower on this ultra high selling bar, this selling climax, was in fact the trigger to go long. So you had an opportunity here to run this short 60 plus ticks, right? And then inversely run it long 60 plus ticks. And this all transpired before 10 a.m. How did I know to take these trades with confidence? Well, one, they meet my trade plan. Okay, so that's the key component. They meet my trade plan. They check all my boxes. But two, it was really the onsight of the wide bar, the Hawkeye wide bar at 8:06 a.m. and the ultra high volume radar dot at 9 a.m. that said, hey, these now are confirmed based upon your trade plan around employing the Hawkeye indicators through the Hawkeye methodology of understanding the relationship between volume and price action. If I get a wide bar and increase buying into an area that we're having a hard time getting through, and we don't penetrate it, there's a good chance that we're going to fail there. Inversely, if I get super strong selling, right, and then that selling that we fail to push through becomes support, what's going to happen? We're going to reverse. So two relatively easy to identify setups here, guys. By one, the first one was triggered by the wide bar, and the second one was triggered by ultra high selling volume, right? At a prior area of support. I mean, look. I mean, here's support. Right? That's the last impulse, correction, impulse, correction, impulse, correction, impulse, consolidation, and this is where we ran out of steam. This is really the origin or the onset to that push higher. Well, guess what happened? When we returned there, the sellers were unsuccessful in pushing through it. So, my question for you is very simple. Is your trade plan or your edge in the market volume and price action forward? And by forward, meaning foundational. Is the first thing you look at volume and price action, right? And if it's not, and you're not finding consistent success in all market conditions, then I urge you to say, let me step aside for one quick second. Let me think about this and understand the relationship between volume and price action a little bit better, because it could be giving me a picture that perhaps I'm missing. All right? The relationship between volume and price action is going to be the only leading indicator offered to you in the market, right? Because it's telling you the relationship between buyers and sellers. Right? It's printing it on the bottom, it's showing it to you on the price action. And with those two components, you can, more often than not, validate a theory or devaluate it and say, you know what, there isn't volume and price action supporting what I'm thinking about potentially doing or putting risk on. I'm going to wait until I can confirm it with volume and price action. I was watching this, guys. I wanted to short this. In fact, I wanted to short it right here. I wanted to get short here. But this, when I saw this, we didn't violate this low here. We were still holding this support. We came in, we made a little bit higher support. We came in, made a little bit higher support. Came in, made a little bit higher support, and then we got stalled out. And then we took this pullback. We broke some of this support here. And then this next push that failed, that's when I knew it was it. I was like, all right, I can get in the market here. If I'm wrong, I'm going to risk 5 or 6 ticks. If I'm right, well, solve for yourself. Okay? That is how precise you should be approaching the market. If my analysis is correct, this should transpire. If my analysis is incorrect, which sometimes it will be, this is the tiniest loss that I'm willing to take, because at that point I'm now proven wrong. And that should be your approach to the market. It doesn't matter if you're day trading, swing trading, position trading. Doesn't matter if it's stocks, futures, forex, and cryptocurrencies. I know a lot of the content you see from me is the futures market because that's what I personally trade. A lot of it that you see from me is intraday because that is also what I personally trade these days. But it doesn't discount that the application of volume and price action is consistent throughout all approaches and assets within the market. So, I asked you a question earlier. Is your trade plan or your edge in the market volume and price action forward? If it's not, and that is not either what you're using to identify and confirm your trade setups, I want to invite you to take a little bit of time. I want you to go below this video. I want you to click on the links. I want you to consume the content. I want you to reach out to myself. I want you to reach out to my Hawkeye concierge team. I want you to ask your questions. We want to help you understand that if you're using volume and price action, why you may not be using it as effectively as you could be, or if you're not using volume and price action, that perhaps you should be, right? We want to give you the tools that make it as easy as possible to visually identify when and where these particular patterns or relationship between volume and price action occur. And then we want to give you access to the Hawkeye Mastery Library, because I can't just give you these indicators and say good luck. I need you to take them and I need you to understand the theory behind them so that you can approach the market to the highest level of your ability employing them. So again, if you don't mind, there's links below this video. I ask you to click on them, consume the content. Our contact information will be there as well. Please reach out to us. Let us answer your questions. Right? Let us help you take the next step in your trading career. Guys, I'm a paying customer of Hawkeye. All right, I bought the Hawkeye software myself. I used it myself. I've made a lot of money using it. What I've learned through understanding volume and price action has been instrumental in the trader I've become. And I came back to Hawkeye and said, listen, I want to share this with other people. Right? I'm just a small Main Street business guy fixing cars and pumping gas. And I was able to now figure out this relationship between volume and price action, put it to work, and see results. I want to help other people from all walks of life also see results. All right, guys, so I just wanted you to have a little perspective of where I'm coming from. So I look forward to seeing you in the next video. If you enjoyed this, make sure you like it. If you have a question, leave a comment below. I will answer it. All right, and don't hesitate to reach out to us. All right, guys, God bless, and I'll see you in the next one.